My name is Dan. I'm the Customer Learning and Development Consultant here at RightCapital. And for today's presentation, we're going to be focusing on modeling properties in RightCapital. And we're going to be taking a look at pretty much everything today, including data entry, entering existing properties into a client's net worth, and modeling future property purchase and relocation goals. We're going to be exploring selling properties and how you can utilize the retirement analysis to sell properties at different times and compare and contrast different scenarios. We're going to look at a handful of settings that impact property purchases and property sales. And although these RightCapital Academy webinars are typically a bit more introductory in nature, we're also going to be diving a bit into some of the complexities surrounding investment properties in particular. We're going to be looking at a new feature today, which is the detailed rental income schedule. And we're also going to be touching on the tax implications of things like annual and accumulated depreciation, passive loss carryover, even 1031 exchanges, and so on. So hopefully there will be a bit of something in here for everyone today, regardless of whether you're new to the platform or whether you've been with us for some time. As a reminder, these webinars are recorded, and we do post these recordings within the webinars page of our Help Center shortly after each presentation. And for those of you who might be a bit newer, these webinars are also interactive, and we will be doing a live Q&A at the end of the presentation. So if you do have any questions at all as we're making our way through, please feel free to write in using the questions field in the GoToWebinar control panel on your screen. I've got about 30 to 35 minutes of prepared content for you today, and then I will be sticking around to answer as many questions as I can until the top of the hour. That being said, I'm going to take a brief moment to switch over to my RightCapital login here, and then we can get started. All right, so here we are in my advisor portal. Let me just quickly launch into the client plan that I've prepared for today, which is a joint plan for Iris and Barry West. And we're going to dive right into the profile net worth section here, which is where we can enter a client's existing properties into their RightCapital financial plan. So for newer clients who might still be within that initial data entry phase, that virtual onboarding process, by default, this would be the fourth step of that initial process. And the first thing to note here is that within the net worth section, when it comes to properties, the primary home is pre-populated. So within every client plan, you'll see the primary home present here as a starting point when you click the property tab on the left-hand side. So primary homes are pre-populated by default, and additional properties can be added to a client plan by clicking the Add Account button in the upper right, and then hovering over property, where you'll find a few different options. So we are going to start by taking a look at the primary home today. There is a good deal of overlap between properties in terms of data entry, so this will be a useful introduction for us. When you click on that primary home tile to open that up on your screen, the first thing you'll see is this rent or own toggle in the upper left of this card. And for clients who might be renters rather than homeowners, the data entry process is pretty straightforward here. We can specify the client's monthly rents that they're paying, as well as any annual insurance, renter's insurance that they might be paying on an annual basis as well. So for those clients who are renters, pretty straightforward here in terms of the data entry. More commonly, for clients who own their primary home, the first thing you'll want to do is, of course, switch from rent to own at the top of this card here. And that's going to change the data entry to allow you to enter the details of that primary home. So we're going to walk through this together field by field. The first thing you'll really want to do is specify the owner, whether that's jointly owned or an individual client within the plan. If you'd like, you can also enter a specific name for the primary home if you'd rather see something else reflected in the cash flows. The purchase year is an input that allows you to specify when these clients originally purchased their home. If you aren't sure, you can safely leave this set to already started, and we'll assume that was purchased at some point prior to the first cash flow year. The purchase price is one of the more important inputs here, so you'll definitely want to make sure that you enter this value. When it comes to selling properties in RightCapital, we do reference the purchase price in order to calculate accurate capital gains taxes when those property sales occur. So definitely make sure that you're entering the original purchase price here. You will, of course, also want to enter the current value of the property as well. There's also an option on the right-hand side for any annual appreciation that you'd like to see reflected within the future-looking projections. So this will, of course, increase the value of the property each year going forward. But something to note here is that it will also increase the annual insurance amounts that we enter in the lower left here as well. So just something to keep in mind when it comes to annual appreciation. These next two fields are for annual property taxes and the annual tax increase. So we can go ahead and enter whatever these clients are paying in terms of annual property taxes, and then whatever we'd like to see in terms of that year-over-year increase there. And then these last two fields are, again, for annual insurance and any additional maintenance fees that you'd like to see reflected here. So something I want to address when it comes to properties in general, specifically these last couple fields for these fees. The most common question I tend to get is, why list property fees here within the net worth instead of including those within the client's living expenses, which for pre-retirement is the profile expenses tab. For clients who are retired, that would be in the profile goals tab here. And the reason that we list those property fees within the property entry themselves rather than choosing to include those in the general living expenses is specifically so that if we choose to sell that property at any point within the projections, these fees related to that property will automatically stop when that property is sold. And if we're relocating properties within the plan, those fees will change from whatever we have here for the current property to whatever you enter for the new property. So that's something to keep in mind here when it comes to these property taxes, insurance, HOA maintenance, etc. Last thing I'll mention as it relates to the primary home here, you may notice that unlike other entries here in the net worth, the primary home cannot be deleted. That's by design. We assume that every client does have a primary residence. That's not to say we can't remove the primary home from the projections, however. So in those cases where maybe you do have an older client who might be living with their children or something along those lines, and you don't necessarily want to see a primary home with an associated value listed on the client's balance sheet and in their projections. You can functionally turn the primary home off within the plan by setting it to rent and then just leaving the rent and insurance at $0. And that will essentially remove the primary home from the retirement section and all of those future-looking projections. So for those select situations where you might find yourself wanting to do so, you can turn this off. Next, we're going to take a look at vacation homes here. So again, to add additional properties to the net worth section, we can click the Add Account button in the upper right, hover over Property, and then in this case, we're going to choose the Vacation Home option. So you may notice right away that there's a lot of similarities in terms of data entry. For the most part, it is a mostly identical process in terms of entering the purchase price and current value for our vacation home. Maybe we'll name this one as well. We'll say maybe these clients have a condo in Florida that we'd like to see here. Same process in terms of fees. So let's make sure we enter our annual property tax, insurance, and maintenance fees. And the main difference here when it comes to vacation properties is there are some additional fields for the location of the property. So we can choose what state this vacation home is in, as well as the year of sale. So we can choose if the clients are planning to sell this property off at any point within the current plan. We can indicate that here, whether that's a calendar year, maybe one of the client's retirement ages, or if the clients plan to hold on to this property indefinitely, we can leave that set to end of both plans here. One thing I want to mention, before we move on, in regards to the location, you may have noticed that there wasn't a location field in the primary home entry. And as a reminder, the residence state for the household as a whole, that is used for the residence state for the primary home is actually entered in the profile family area. So just a quick reminder here, if this is a new client plan, this will be the very first thing you walk through in that initial data entry process. And that residence state is entered into the client card here. There's a field at the very bottom for the residence state for the entire household. So this is what's also going to be used as the location of the primary home. So just something to keep in mind there. Great, so that brings us to investment properties or rental properties. We are going to spend a little bit more time walking through the data entry for investment properties just because it is a little bit more nuanced in terms of some of the inputs. So again, we're going to click Add Account Property, and then in this case, we're going to click Investment Property to add that rental to the client plan here. Once again, we're going to want to specify the purchase price and the current value up front here. Similar, data entry here in terms of appreciation, property taxes, insurance, and maintenance as well. So I'm not going to walk through that a third time here, but what I really want to get to when it comes to investment properties is some of these additional fields at the bottom here that are not present for other types of properties. So these first four additional fields here are for rental income. How much are these clients expecting to receive each year within the projections? So you really have two options in terms of how you enter rental income into an investment property entry here. And that's determined by the rent approach, this first field. The simple growth approach is a linear projection, a straight line projection. And what we see with this option is we're going to be able to enter a single values for the average, expected monthly rental income. We'll enter a single percentage for the annual rent increase year over year, and then a single percentage for the expected vacancy rate. What percentage of the year these clients expect this rental to be vacant, and that will directly reduce the annual rental income by whatever percentage you indicate here. So that's the simple growth option. But I do want to make sure I highlight at this point that the other option here is new in RightCapital as of, I believe, a couple of weeks ago. We added a detailed schedule, a detailed rental income schedule to investment property entries here, which really allows you to be a lot more specific in terms of year-to-year monthly rent, as well as year-to-year vacancy rates. So rather than a linear projection here, we have a lot more flexibility to tell the system exactly what dollar amount we'd like to see in terms of monthly rent on a yearly basis, and also that vacancy rate. So this allows us to reflect situations where maybe a client is going to take their rental off the market for a handful of years for whatever reason, or maybe they're going to live in the property for a portion of the year. We can really reflect a wide variety of scenarios using the detailed rental schedule. If you're familiar with detailed schedules in other areas in RightCapital, you may have already noticed that in the lower left we have a quick fill button, which has a couple of features that are designed to make your life easier when filling out these schedules. So instead of having to manually plug in numbers for each and every year, you have a couple options in terms of filling these schedules out a bit more quickly. So firstly, you can always click Quick Fill Clear All to simply zero out all of the fields within the schedule. The simple growth field here is going to take those values you entered into the simple growth approach back in the data entry drawer here. So I've entered 2,500 a month with a 3% annual increase. And then if I choose to use that simple growth button here, that's going to populate this field with that information. So we can use that as a starting point and then make adjustments by tweaking individual values. So definitely very valuable with the simple growth option here. And then lastly, we have an interpolate option, which can be used to fill the gaps between two sets of values. So just as a quick example, maybe we want to enter a 5% vacancy rate for the duration of this schedule. We can enter 5% for year 1, 5% for our final year. And then if I click Quick Fill Interpolate, it's going to fill those gaps between those two values. So again, quick fill options can really make your life a lot easier when filling out these detailed rental income schedules. Great. So moving on to the next 4 fields within the investment property entry. These final 4 fields allow us to specify some important tax details that can have a pretty massive impact on our projections. Starting with the total tax basis, you'll definitely want to make sure to enter this value here. This represents the total cost basis of the property, excluding land. So we want to make sure not to include any non-depreciable portion of that property value here. And when it comes to investment properties, the total tax basis essentially replaces the purchase price as the value that we'll reference when the property is sold. So it's, again, very important to remember to enter that total tax basis. Leaving the total tax basis at 0 can definitely result in some strange looking output in the cash flows. So we'll want to make sure that this is filled out here. Our next 2 fields are where we can enter the accumulated and annual depreciation. Now, we aren't going to be diving too deep into the nuances of this particular element in today's presentation, but considering that this is one of the major tax benefits for landlords and real estate investors, it's definitely important to be aware that this is here. And luckily, RightCapital will do most of the work for you here in terms of the tax impact once we enter these values. So for those of you who maybe are unfamiliar, depreciation on rental properties is a tax benefit that allows you to deduct the value of the rental property from your taxable income, spread out over a period of time. And that period of time for our purposes here is 27 and a half years. Investment properties in RightCapital are treated as residential rental properties with a useful life of 27 and a half years in the eyes of the IRS. And this deduction is going to occur either until the total tax basis of the property has been reached or until we reach that maximum time frame of 27 and a half years. So when it comes to entering this into RightCapital, the accumulated depreciation is going to be the total depreciation that has already been accumulated as of today. And that is essentially going to reduce the total tax basis when it comes to the maximum deduction amount that we can claim. Whereas the annual depreciation here is the amount that we're going to actually be deducting each year going forward within the projections. And this is all going to flow through into the tax calculations in RightCapital. And if you were to take a look at those sample tax forms in the tax module, you actually see this offsetting the rental income on line 5 of the Schedule 1, which would also reduce the client's taxable income in those years. In terms of what to actually enter here in these fields, while there are some different methods and strategies that people can utilize, most often what I tend to see advisors do is a simple depreciation calculation, which is just taking the total tax basis of the property, dividing it by 27 and a half years, and spreading that deduction out evenly over that time frame. So this is normally where I'd break out my calculator, but luckily I did this math in advance. For our total tax basis of $800K, that would give us $29,091 in annual depreciation over that 27 and a half years. And let's say maybe we've already accumulated this amount for 3 years, let's say. We can also enter 87,273 as our accumulated depreciation value. Great. So that brings us to our last field here, which is for passive loss carryover. And this is going to be applicable in cases where maybe the clients have been losing money for a period of time on this rental property. And when it comes to these deductions in RightCapital, all of the passive activity rules are built into the system. So clients will be able to deduct up to $25,000 per year in passive losses as long as they're below that MAGI phase out range of 100,000 to 150,000. And this passive loss carried field is where we can enter any losses that were not able to be deducted in previous years that have been carried forward to the present day. So if this rental property were to become profitable in the future looking projections, we'll see that deduction begin to occur. And again, this will offset the rental income that flows through into the Schedule 1. And in cases where maybe our property taxes, annual insurance and annual maintenance fees outweigh the rental income that we enter into this property, any future passive losses that aren't able to be deducted will continue to carry forward until the property is sold, which coincidentally is our last input here. So again, just like vacation properties, we can choose when we want to see this property sold during the projections, whether that's a specific year when one client or the other retires or so on. The last thing I'll mention here in regards to some of these tax impacts is that when these properties are sold, RightCapital will also automatically calculate and perform what's called depreciation recapture. So if the sale of the property exceeds the adjusted tax basis at the time of the sale, the difference between those values gets taxed at ordinary income rates rather than long-term capital gains rates, up to a max of 25%. So for these 27.5-year properties, this is specifically called the unrecaptured Section 1250 gain. And this is also something that we can take a look at in the sample tax forms, specifically on the Schedule D. So I know that was quite a lot of information. So just to put a bow on everything we touched on here, I do want to quickly just highlight those sample tax forms, just because I have mentioned them a few times now. So for those of you who might be a little bit newer to RightCapital, you can find sample tax forms within each and every client plan by navigating to the tax estimate, tax details, or rather the tax estimate details tab of each client plan. And these forms will pre-populate with information based on all of your data entry and everything happening each year within the projections. So there's really a lot of valuable information here in terms of how RightCapital is calculating the federal tax figures. And for rental properties in particular, you'll be able to find rental income on the Schedule 1, on line 5 in particular. And then when it comes to selling a rental property, we'll see that flow through on the Schedule D. So we'll find long-term capital gains from the sale, I believe on line 11 here. Yep, lines 11 through 15 is where all of that's going to be reflected. And then if we have that recapture happening in terms of depreciation recapture, that flows through on line 19 here. Perfect. So that does cover it for investment properties. That is certainly the most in the weeds that we'll be getting for today in terms of some of these tax complexities, but I do always like to highlight some of those details. There's a big emphasis in RightCapital on simplicity and ease of use when it comes to actually entering client data, but it can be reassuring sometimes to see just how robust these calculations are behind the scenes, so that we can all be confident that all of these variables are being captured and are being reflected in the output that we see. Great. So moving on here, the next thing I want to touch on in terms of data entry is mortgages. That's something that's also entered into the profile net worth section here, but rather, instead of within the property entry themselves, those are added as loans. So you can add an existing mortgage for an existing property here by clicking Add Account in the upper right and then choosing Loan. And that's going to default to mortgage as the loan type here. There are a few additional options if you have clients with ARMs, adjustable rate mortgages, or interest-only mortgages. You can choose those as well, but we'll reflect a traditional mortgage here for today. In terms of data entry, there's really two different ways that you can choose to fill out mortgages in RightCapital. And the first would be to have RightCapital do the calculation for you in terms of the minimum payment amount. In order to do that, all you need to do is enter these first few fields here, the original amount, the interest rate, and of course the loan term. The origination year is mostly categorical, but you can choose to enter that as well if you'd like. But just to demonstrate, entering these first three values here will cause us to automatically calculate that minimum payment. And we can see that if we save our data entry here and then reopen the data entry drawer, we can see that minimum payment being generated. Alternatively, if you didn't necessarily have this information from the client, You can also simply just enter, the current balance on the mortgage and then enter a monthly payment amount. So you can choose to, omit these other fields, simply enter the balance and the monthly payment, and that is the payment that we'll see each year until the balance is fully paid. When it comes to mortgages, I do want to also make sure that I highlight the link to house field in the lower right here. So in plans with multiple property entries, you do have the ability to link mortgages to their corresponding property, which is definitely important to make sure that we're doing here. If we leave this set to default, it will link this property to the primary home. So, in this case, we can say if this mortgage was maybe for the Florida condo, you would want to make sure to select that here. And, that way, when you sell that property within the plan, any remaining balance on that mortgage will automatically be paid off. And that's going to offset the proceeds from that property sale. Perfect. Let me click save here to make sure we save those changes. I think I may have also left the property sale set to 2025 here. So let me also reset that as well. I'll leave the set to end of both plans for now, just because we are going to play around with that input in just a bit here. Great. So now that we've entered one of each property type as well as a mortgage into our net worth section, I do want to pivot quickly into the cash flows in the retirement module, just to show everyone exactly where all this information can be found and tracked going forward within the projections. So within the retirement cash flows tab, we have a few different areas where we can track this information. Within the summary page is where we can find all of the inflows and outflows associated with these properties. So in terms of inflows, if we click into the other inflows column of cash inflows, this is where we'll find rental income from those investment properties, as well as sale proceeds if we're selling off any properties early within the plan. In terms of expenses, we can click into the expenses column of the cash outflows section, and this is where we'll find everything from mortgage, principal and interest, and then those property tax, insurance, and HOA and maintenance fees for the primary home. So do keep in mind housing specifically is for the client's primary home. The same expenses for rental and vacation properties has its own dedicated column here. Your rental and vacation, we can take a look at the additional properties in the plan. And then when it comes to actually tracking the values of these properties and the balances on the mortgages, that information is all found in the net worth tab here. So in terms of property values, again, we can find those here. Primary and vacation homes have their own column here, and then there's a dedicated area for investment properties, so we can track those as they are projected out into the future. And then in terms of mortgages, those have their own column on the right-hand side here, so we can track those balances as they're being paid down within the projections. Perfect. So to wrap up the data entry portion of today's presentation, I'd be remiss if I didn't also highlight some of the property goals that can be entered specifically into the profile goals tab. So everything that we did within the profile net worth section in terms of data entries, for existing properties that the clients already own, but in cases, where maybe you want to model future property purchases, that is all done here within the goals section. And by clicking the add goal button in the upper right, you will find a property menu where we can find a few different property related goals. So let's start with something we're familiar with already. Let's maybe add a vacation home here. In terms of data entry, it is essentially identical to what we walked through in the net worth section, with one major difference. These goal cards are essentially property entries and mortgage entries combined. So you'll notice we have all the information for the property itself at the top here, but we also have fields to indicate the down payments, the term, and the interest rate, which is going to automatically generate a mortgage, and we'll see that amortization schedule calculated and applied within the plan as well. So similar for investment properties, the one thing I do want to highlight when it relates to investment properties, so let me just add a quick investment property purchase goal here. There is an option when it comes to property purchases to select an acquisition type. So maybe we have a property that already exists within the plan that we're planning to convert to a rental. For these kind of situations, you can add an investment property goal card, choose convert property as the acquisition type. Maybe these clients are planning to convert their Florida condo from a vacation home into a rental. And that's something we can accomplish here by utilizing the acquisition type field. The next one I want to touch on, just because it is probably the most common property goal, is the primary home relocation goal. So if you'll remember, there was no year of sale field in that primary home entry in the net worth. So when it comes to selling the primary home, the only way to sell a primary home is to perform a primary home relocation. So these cards allow you to, again, both specify the details of the new property, whether they're purchasing a new home, inheriting a home potentially, or moving into an existing property. And then again, we can decide what we want to do with the current property, whether we're selling that primary home immediately or converting it to either a vacation or rental property. So lots of flexibility here when it comes to primary home relocations. And we're going to revisit this card in just a few minutes here once we get to the retirement analysis section as well. I do want to quickly highlight the land option, just because that's something I didn't touch on in the net worth. When it comes to adding land, either as an existing property asset or as a property purchase, the data entry is identical to investment properties. The main difference between land and investment properties in terms of how they're treated in RightCapital is that land is non-depreciable, so we won't see the depreciation options there. But other than that, we've got all the same inputs here. We can even indicate monthly income and things like that as well for land entries. Our last property related goal is the home improvement goal. And this one's a little bit interesting in that this reflects as an expense within the projections, but this also increases both the the total tax basis and potentially the current value of the specific property that you select, which can be really valuable. We can definitely utilize this if the clients plan to make some improvements to maybe one of their rental properties, for instance. Something to keep in mind is that whatever dollar amount you enter into the annual amount field, this is going to be both the expense we see in the cash flows as well as the dollar amount that gets added to that basis. And then in terms of increasing the current value, there's a separate field for that, whether, what percentage of the annual amount is also going to increase, the value of the property. So you can specify that here as well. You can have these home improvement goals, occur a single time, or if that's a recurring goal, we can maybe dial in a time frame there as well. So you have lots of flexibility here with these home improvement goals. Great. So before moving on to the retirement analysis and taking a look at some comparisons, I do want to quickly just make sure I touch on a handful of settings and assumptions that are important to be aware of when it comes to specifically purchasing and selling property within a plan. And those can be found within the gear icon settings tab of each and every client plan, specifically within the other assumptions tab. And there's really only two settings to be aware of here. If we scroll all the way down to the bottom of this page, in the miscellaneous section, you'll find two settings for the cost of purchasing and the cost of selling real estate within a plan. So, by default, the cost of purchasing real estate is set to 0.1%, but more significantly, the cost of selling real estate, this is more reflective of typical real estate agent fees and things like that, set to 6%. So if you're ever purchasing or selling property in a plan and the dollar amount you see in the cash flows is a little bit different than the one that you entered or the one that you were expecting to see, that is likely a result of these assumptions here. And you can choose to customize these on a per client basis, depending on what you want to see for that particular household. So do keep in mind that these settings are located here within the other assumptions tab of the gear icon settings. Great. So that takes us to the last portion of today's presentation, which is creating what if scenarios and comparing and contrasting multiple proposals in the retirement analysis section. So just to take a step back here and look at things big picture, what we're doing here in the retirement analysis is really using our action items to model various what if scenarios, address specific client questions, and of course, highlight the value of your recommendations. So this is a really valuable area that we can use when it comes to properties to propose some property related goals, as well as compare and contrast selling properties at different times and the impact that that can have on our plan as a whole. So when it comes to these action items, we really do have nearly infinite possibilities, but I do want to make sure to review some of the more common examples here as it relates to properties, starting with proposing primary home relocations. So, we can always enter those primary home relocations into the profile section for clients who are certain that they want to relocate at a certain time and they have a plan laid out. But for those clients who are maybe a little bit more up in the air, maybe they want to relocate, at some point in the future, but they aren't sure if it's feasible for them, and they want to see the impact that that might have on their plan. That's something that we can model as a proposal here in the retirement section by clicking the edit button in the lower right corner here, and then clicking add new items. So, this area is going to allow you to add any of the same cards you'd find across the different sections of the profile, including property goals. So within the goals property menu here, we can propose a primary home relocation, and adding a relocation here is only going to factor that into the proposed plan in RightCapital. So again, in terms of data entry, it is exactly the same at what we looked at a moment ago in the profile, but this allows you to set up those comparisons and see if that's feasible for the clients without impacting their current plan and the current projections. I do want to make sure to also highlight something related to purchasing other properties. So when it comes to proposing some property purchase goals, which again can be done by clicking add new items and then hovering over property, something I want to mention when it comes to investment property purchases in particular, just like the goals area of the profile, we can also propose rental, investment property purchases at some point in the future here. And something I want to make sure I highlight, you can also propose 1031 exchanges here. So maybe clients have existing rentals that you want to exchange for a new rental property. This is for those of you who might be unfamiliar, this is an additional tax break that would essentially let a client defer the capital gains taxes that would normally be realized upon selling an investment property. So this is something that can be done, within these investment property goal cards as well. So I wanted to make sure to quickly highlight that here. Great. So the last scenario that I want to demonstrate here before transitioning into our Q&A is setting up two proposals side by side and then selling properties at different times and seeing the impact there. So to set up that sort of scenario, the first thing we would need to do is add some additional proposals. So that's something that can be done by clicking the pencil and paper icon next to the current plan here. So this will open a drawer for you, allowing you to add additional plans. So in this case, we're going to add two additional plans. And for the sake of this comparison, we'll say that we're going to be selling maybe that Florida condo. So we'll say sell condo, maybe one of these will be right away. And then we'll do a second plan where we sell that condo at maybe retirement. And then we'll have those two proposals that will be created, and we'll be able to individually adjust those proposals by selecting them on the left-hand side here. So let's start with our sell condo right away proposal. Let's choose that on the left, scroll down to our action items. You'll be able to adjust the date of sale for all of the properties within your plan within the sort of lower right corner here under properties. So currently we left this set to end of both plans in the net worth section, meaning that in the current projections, in the current plan, this property is being held onto for the duration of the projections. But in this case, we want to sell this property right away. We'll sell this at the very beginning of next year, let's say 2025. So we'll click refresh to factor that into our first proposal here. And then we'll want to do a quick swap. We'll select our other proposal, sell condo at retirement on the left, and then make sure our sell condo right away is selected on the right. I'll give that a quick minute to update here. And then we can rinse and repeat that process. Scroll back down to the action items, and then we'll want to make sure to sell that at, we'll say Iris's retirement is when we plan to sell that condo in this projection. And then with that comparison set up side by side here, we can see the impacts in terms of probability of success and also median ending asset value. So in this case, it looks like maybe selling that condo right away would yield more value in the long term than holding on to that until retirement. Something to keep in mind that I want to make sure I mention when it comes to selling properties in RightCapital, regardless of whether or not your plan is set to save or reinvest, excess cash flows. Whenever you're selling something like a property within a plan, we're always going to save and reinvest those proceeds. We're never going to sell or spend off rather, the proceeds of a property sale. So in this particular instance, we can see that even though I'm spending off cash flow surplus in this plan, the proceeds from that vacation home sale are still being saved and reinvested here in the net flows column, which likely is allowing us to accumulate more assets in the long term compared to selling that property at retirement here. So that was a relatively simple example, but you can mix and match these sorts of variables with any other changes, any other what ifs you'd like to model into these proposals, and ultimately compare side by side the impacts that will have on the client's plan as a whole. I do want to make sure I quickly highlight just a handful of key comparison visuals here as well. So in addition to the Monte Carlo analysis here, the probability of success, I do want to highlight also in the comparisons tab here, there is an option to take a look at a scenario analysis for overall net worth. And this will include property value. So just something to keep in mind here in the comparisons tab if we're directly comparing two different plans like this. And then also in the retirement details tab, I want to make sure I highlight that there is an income sources chart here where we can analyze all of a client's income sources in their retirement years, including potentially rental income. And that's going to be shown in green here. Rental income is factored in as other income here in the income sources chart. So we can see that here, represented by this green portion of the chart. And it's also considered stable income. So rental income will contribute to a client's stable income percentage as well. So just a couple additional visuals that you can utilize here with your clients when having conversations about property sales and rental income and things of that nature in RightCapital.